possible traps of capital economy globalization at the same time as the explosive rise in prices of resources such as oil and minerals, as well as labor factors in China at that time. The prices of Chinese assets skyrocketed and plummeted in a thrilling manner within a year. The stock K index quickly doubled and then returned to its original point, while China Petroleum, once the world's largest market value $1 trillion, continued to decline, falling below its issuance price at the lowest point, and its market value shrank to $400 billion. In addition, Ping and insolvency's profitability and malicious money circling have been criticized repeatedly, as well as the centralized lifting of the yuan ban on untraded shares. Statistics show that by the end of 2008, the cumulative number of shares lifted from the yuan ban accounted for 37.67% of the total number of tradable A shares in Shanghai and Shenzhen, and will reach 90.1% by the end of 2009. The market value of the lifting of the yuan ban this year exceeded 3 trillion yuan, which is equivalent to the current total fund size. Untraded shares has not only moved the cheese of institutional investors, but also formed a terrible psychological expectation. Market confidence is on the brink of collapse. As is well known, the process of establishing a market economy with Chinese characteristics is also the various elements and products of China and the process of obtaining market-oriented confirmation of asset prices. Over the past 30 years, China has gradually completed the transformation of consumer goods from planned prices to market prices, and the deepening of the market economy has naturally pushed traditional production factors such as land and labor, as well as modern production factors such as management, brand, and technology, as well as market-oriented confirmation of state-owned enterprises with the large amount of resources and factors to the forefront. The equity split reform was carried out in this context. However, the problem is that it will take only 4 or 5 years from the beginning of the reform in 2005 to basically achieve full circulation in the next 3 years. Compared with the adjustment and running in of the marketization of consumer goods relations of production for nearly 30 years, the reform of asset prices is inevitably hasty or even excessive, urgent and violent. Fluctuations emerged, just as the panic caused by the price breakthrough in the late 1980s led to market and even social instability. More importantly, the premise of equity split is not market-oriented, but rather the unique characteristics of China's stock market's emerging plus transition levying and serving state-owned enterprises to attract money is still a phased mission of the stock market. Under such a premise, different companies receive vastly different policy treatments. Some companies can raise billions of yuan while others with promising development prospects are often limited by listing targets and struggling in the quagmire of tight funds. Both the pricing mechanism of stocks and the formation mechanism of stock reform considerations are still unilateral, with small and medium-sized investors waiting for give and give to take orders at high levels. In a market that cannot reflect the fair game of multiple stakeholders, even if it is fully circulated, there is no room for market-oriented confirmation of asset prices. The stock reform cannot solve the marketization problem of the price formation mechanism, and the asset price crisis has emerged. Except for the above, the mismatch between space and space also has human factors in the process of advancement. On the one hand, the deregulation of untraded shares and XIA is too concentrated. To some extent, in order to balance the interests of all parties. The relevant parties have taken 3 steps of share reform: no expansion of private placement, no expansion of the number of companies, public placement, IPO, and taken 2 steps, resulting in the superposition of the deregulation of newly listed shares and the deregulation of untraded SH, Aries and Ziofair of old listed companies. On the other hand, classic ideas and elite consciousness are deeply rooted, and the pursuit of new economic phenomena that are not clear and understood is still constantly influencing and misleading policies, such as thinking that the lifting of the ban on untraded shares stocks is just a pain in the stock reform without regulation. Of course, not only the stock market, but also the confirmation of asset prices in Chinese assets, especially in the process of enterprise mergers and acquisitions. The formation of land prices is still in crisis to some extent. The typical administrative collusion leads to inefficient use of resources, and even local governments use political prospects as bait to merge and restructure local state-owned enterprises that are on the brink of bankruptcy, resulting in cases of dragging down private enterprises. Obviously, this non-market-oriented enterprise merger can achieve the goal of optimizing enterprise combinations. The insider trading and market manipulation accompanying the process of mergers and acquisitions of listed companies, as well as the existence of repurchase agreements in land bidding and listing, have undoubtedly led to distortion of asset prices. However, with the exposure and expansion of the problem, the truth has become increasingly clear. Relevant departments have responded, such as Order No. 39 of the Ministry of Land and Resources in 2007 and the newly introduced management measures for major asset restructuring of listed companies April 18, 2008, which have begun to regulate non-market-oriented and even illegal behaviors commonly found in land transactions and enterprise mergers and acquisitions. In fact, with the postponement of the commodity economy and the landing of the capital economy, China's asset prices are not as high, as in addition to excessive volatility and even distortion due to the incomplete marketization of asset price formation mechanisms. The greater crisis lies in China's lack of experience and preparation in capital allocation and capital relationship operation. The meaning of the arrival of capital economy. With the formation and establishment of the new relations of production, one of the most noteworthy changes is that the new relations of production are leading to the evolution of the role of capital, from making money through production to making money through patents, brands, and annals, from relying on primitive accumulation and bank loans to driving production, to relying mainly on capital operation and leverage, from expanding the profit model of reproduction to using the smallest amount of capital to make the world work for you. Capital has retreated from the driver's seat to the back seat, becoming a worker like a worker. Therefore, straightening out asset prices and developing the capital economy are not just about marketization or money. The key is to see this change and create new corresponding relations of production. Otherwise, China's asset prices will also face a life-threatening crisis of being dragged away for a long time. In the previous process of commodity price marketization, made in China was doomed to be low-end and cheap in the international trading system. Relations of production established in developed countries such as Britain and the United States Now the price of Chinese assets seems to be in danger of repeating the same old mistakes. A plus H's large blue chip stocks sold cheaply outside and sold at a high price inside has paid tuition fees. And the idea of blindly conflicting with mature markets in one direction is undoubtedly a tiger's mouth, due to the fact that the Hong Kong dollar is only a shadow currency and is subject to the capital relationship dominated by the US dollar. It does not qualify to price assets, especially large listed companies. If RMB assets are priced in the Hong Kong market, the result will be a loss of a share pricing power. It can be seen that the crisis of asset prices is essentially the key to market-oriented reform and the reform of relations of production. The boundary state is sensitive because it is critical, such as the special disorder of real estate information, the prediction of a 100-day upheaval by real estate developers, and the significant decline in property income of residents in some regions, leading to discussions on investment structures. The most typical example is the stock market. Since reaching its peak in October last year, the Chinese stock market has dropped by 50% from its previous low point, and the market has entered a sensitive critical state. Even a small local change can continuously amplify and extend to the entire system. Petrochina's breakout triggered widespread doubts about the inquiry system and stock pricing mechanism, and Ping and insurance refinancing also triggered calls for control and regulation of refinancing. The policy is also allergic. On the one hand, it worries about the continuous decline of the stock market, which will affect social stability. On the other hand, there is also concern that the improper control of the market rescue situation and excessive force may lead to a reversal of the stock market, which deviates from the overall situation of controlling inflation pressure. This further leads to the neglect of the essence of China's asset price crisis and the potential traps of capital economy globalization by relevant parties.